Going on, guys? So, welcome to our market update call. Trying to make this quick, but also in here, I do want to add. Matter of fact, I'm gonna just start off with this, because what we're gonna have coming up tomorrow is gonna be Wednesday. So this is gonna be the start of actually for U.S. session. Actually, we're gonna see ADP employment, ISM manufacturing. It's definitely gonna be something really good data that could give us a direction. At least ADP employment does play a big toll, especially during the weeks of non-farm payroll. But also we got ISM manufacturing that's going to come out later today. But also, London session, we're going to focus on French, German, and Eurozone with the United Kingdom PMI data all throughout London. All right. So from 350 all the way to 430, we're going to really see that PMI data come in play. All right. So see you guys at that time. But what I want us to focus on today, like right now, is just like understanding what's driving the dollar, right? Because what we've been seeing so far, for just to throw it out there, obviously we see that we're just pretty much in this range for the whole year. But ending the year with just a lot of dollar strength ever since October, right? Due to rate hikes. Now we're seeing the pretty much the stops of rate hikes coming in play, and this is leading more towards a dovish Federal Reserve. When I'm saying a dovish Federal Reserve, this means that we have a central bank now that is looking to actually cut rates, and that is lowering the price of the dollar. Right, so we made our all time highs, and pretty much we're just at that standstill. Pretty much, when this not seeing the dollar continue to make all time highs like what we did in the past. Every time we hit these key areas, we're just not seeing that come in play anymore because we're not in a hawkish cycle, right? So, what is the other reasons that help dollar continue its strength is geopolitical tensions, but that's still not enough to see dollar perform all time highs. Okay, so the fact that we're now in a dovish cycle, markets are forward looking. So, what do we need currently, right, just to get a actual bias on the dollar? But first, let's look at the bigger picture when it comes to the pretty much the United States, the Feds, right? So last November, the Fed's decision was light detail with no summary of economic projections, right? Remember last time we traded that rate decision, it was more of a dud, right? The even the press conference was a dud. There wasn't any really good questions, right? So what we understand is that there was a statement that was removed that the committee has gained greater confidence that inflation is moving sustainably to 2%. That was removed. So that it was a sign that it could cause the feds to stay restrictive, right? But then we also had Jerome Powell say that in near term, the US elections, right, would not have any bearing in policy decisions that they're having. But we kind of have a good idea what Trump may do with physical policy can probably cause the Federal Reserve to remain restrictive, right? They're not going to they're not going to aggressively start cutting rates, right? Because they probably still want to give it a little bit of time to see what happens, right? So they don't want to make a big adjustment too too soon, because what if his policies is inflationary, then they're going to have to adjust monetary policy, right, to combat higher inflation. So as of now, like what we know is that the FOMC did cut rates by 25 basis points. We know that the Feds is now sitting between 4.50 to 4.75. That's just the range. Obviously, that's just the range of where we are with current rates. Inflation is moving towards that 2% goal for the US. So that's nothing new. But we understand that's the comments that the Feds are always saying, right? But the Feds are also highlighting that economic growth continues to grow. Labor markets has eased, right? Because remember last time when they said that, that was something new. They was always saying that the labor markets is extremely strong. Now they're saying they're seeing easing in labor markets, but still remains pretty strong, right? So they're ready to adjust policy decisions, right? If we see higher inflation or if we see a massive downside in labor data. So we understand that. But now with this upcoming uh, NFP number print, we're finally going to see an NFP number where the impact of the hurricanes is not going to be like Boeing. We had the hurricane, we had Boeing, we had what was the other thing? We had the strikes that impacted labor data previously. So now we're having the first print where all of that is not causing a factor, right? So this is why this NFP print is going to be important for us to pay attention to, because now there's no, if we get a lower print, they can't blame it on the hurricane. They can't blame it on the strikes. So that's what's leading to the importance of this NFP print. But not just that, we also want to see other metrics like earnings, right? Because earnings is inflationary. We want to see how earning numbers is as well with unemployment. So that's the importance of NFP moving forward. So what do we need to see for a stronger dollar, right? If we want some bullish surprises, we obviously, when we see data, we want to see extremely good growth in inflation and job data across the board, extremely good, right? Other bullish drivers like rising as a safe haven, but when if we continue to see strong labor data this week and strong growth data this week, it's going to be pretty hard for the markets to not anticipate a stronger dollar to come in play. Like it's going to be hard to not see dollar continue to break above at least 106.6 and continue to hit those all-time highs. But pretty much in technical price action, if I see price break above 107 point, it's a good psychological number, 107.0. If we can start breaking above this zone, especially with strong data in mind and strong reasons, that's probably going to start leading dollar to the upside, right? Especially if we have a strong bullish confirmation when it comes to those prints. What's going to lead for us to expect more downside? Obviously, everything opposite. If we have extreme bad growth, inflation, and job data, that should give us that trigger for more of a dovish central bank coming in play, leading, probably not leading towards 50 basis point cuts, but at least the markets could price out, the possibility of a pause or definitely a rate hike is out the picture, but it could price out the possibility of a pause and the Feds could start leaning towards that 25 basis point cut moving forward, right? So if we start seeing price breaking below that 105 400, I think that's going to be like a nice clear safer sell opportunity, looking for more downside on the dollar. Even if we just start breaking below like 10, yeah, like 105.600 would probably be something safe, just watching dollar continue to fall with those confirmations coming in play, right? So just be prepared, moving forward this week. We do have JOLTS. We just finished JOLTS, which did come out higher. Now we're going to have ADP employment, ISM on Wednesday, with Powell speaking on Wednesday. Thursday, we know that's unemployment claims. And then on Friday is NFP. We got Fed speakers as well. So this week is important because this is also the last week for Fed speakers. And that's what's really going to give us the direction that we want. So just remember, if we see stronger dollar, right? Obviously, if you're trading gold, that's going to be opposite of gold. But this is strictly just for the dollar for this moment, just so that we could get a better understanding on what's going on. Okay. So now another thing we could talk about euro, because that's what we're going to be euro, and then we're going to be focusing on the pound, right? So let's just so when we look at euro, obviously kind of this the same like the dollar pretty much, but what's morally impacting euro is geopolitical tensions as well. Also, tariffs is coming into play. That's going to be impacting euro as well. Russia impacting euro. But, the bigger picture that we know, that ECB meeting October 17th, right? That was their last rate decision. They cut rates by 25 basis points. right? Signaling a clear, they're already signaling a possible cut for December. That's one of the possibilities. The ECB, their policy, they're expecting to cut in December unless economic data is extremely high, right? Or major rises and upticks in inflation. Then most likely that will lead for the ECB to pause rates in December. But another thing also that the markets is focusing on the ECB is tariffs, right? Because of the fears of tariffs coming in play that could impact Germany. Okay. And the election for Germany in early 2025 it's definitely going to be another focus point as well. Just like how we see elections is always causing impacts and uncertainty, it's a possibility now that's going to be the next major focus point for Euro is Germany's election, early in 2025. Okay. So that's something that we're going to be paying attention to by next year as well. So as we know that the ECB is just cutting rates by 25 basis points, they're still data dependent. But growth is a concern because if growth is now starting to slow down, that's going to further eager the ECB to cut rates further. So this is why we've been seeing downside in PMI data. We've been seeing weaker German IFO business data. We've been seeing weaker Eurozone inflation, right? So more data moving forward, it's just going to increase those odds of that basis point cut to come in play for the ECB, right? So as of now, like it's more like an 87 to a 90% chance in December, right, that we're going to see the ECB cut rates. So I don't think it's a surprise yet. But now moving forward for Wednesday, we do got more service final PMI. So if those numbers continue to come in lower, right now, if we're looking for bearish opportunities, more weaker data, more poor sentiment for Euro bad economic data is going to increase the odds of a cut, which should push Euro more downwards. Another thing that's going to help uh, Euro get weaker is dollar strength, right? Because like Euro USD is one of the main pairs. If we see dollar strength coming in play, that also hurts Euro, along with geopolitical tensions with Russia, Ukraine, right? So now, if we want to take advantage of a stronger Euro, I really don't think that this PMI print coming in higher will be a major difference. It may be a short term bullish reaction, but that's not going to be the best option that we want to take advantage of. We want to see more downside in Euro, right? Because that's just going to increase the odds of that cut. It's going to make that direction come in play. It's going to make it a lot easier for us to take advantage of. But, what are some good trades that we could take advantage of? Most likely like Euro JPY, as we know that the yen has been stronger. Euro USD is a good one pushing lower if we get a miss in data. All right. So it's just something that we could just look forward to for this event. But the only way I could see more upside in Euro is inflation. If we see inflation comes in drastically higher than expected, that's going to be one of the catalysts that I will look for a massive change in Euro. Okay. So now let's talk about the pound. Uh, no, not that. Just to get an idea, we can see like really a lot of upside in the pound as well, because like if we talk about the bigger picture for the pound, so the BOE, they see inflation is still stickier for longer, right? What we need to know, like right now with Bailey, pretty much what he said is that they're looking to be gradual. Like they're looking to take their time when it comes to actual rate cuts, right? So they're not fully convinced yet that inflation is going to push to the downside the way that they're expecting. And also the budget, right? The United Kingdom's budget. He wants to see how that has an impact on inflation as well. So those are one of the reasons why drastically we're not seeing a massive dovish reaction in the pound currency, is because he just wants to be cautious. He wants to see how the budget actually shows an impact, right? Then most likely with due time, he's just going to see gradual lower prices of rate cuts of 25 basis points, or maybe not at all if we don't see service price inflation actually declining. Because that's one of the things that they're focusing on is service inflation, right? He wants to see it come down more significantly, broadly coming down to that 2% goal, right? So all in, like Bailey's decision was moderately hawkish, right? Especially expecting CPI to be higher. That's one of the reasons why we've been seeing such stronger pound overall, because we're just not seeing an overly dovish Bank of England. So inflation is still the main key for the Bank of England, and the latest CPI prints was hot, right? Like it was still in line, nothing drastically coming down, just to stir the stir markets to actually start pricing that cut coming in play. So December 19th is the next rate decision for the Bank of England, and it's like around an 80% chance that they're expecting a pause. Okay, so what we know is that the latest rate decision, the Bank of England did cut rates by 25 basis points, making their rate the percentages at 4.75. November, uh, the vote count is what's really important when it comes to the BOE also, and they had 8-1, right? So 7-2 was expected. So that alone also in favor of holding rates the same does still cause that strength in the pound currency, and telling the markets that over that rate decision, they having a gradual approach towards rate cuts, right? So that was the reasons over that rate decision we took advantage of buys. We saw strength come in play because they was taking their time. They was being more gradual when it comes to those rate cuts, right? So even though that it's still hawkish, like overall, they're not going to hike rates. So I still like the overall dovish outlook, but in order for us to see more sells in the pound, we need bearish drivers, right? We need to see weakness in economic data. But like obviously this week we don't have inflation because that's one of the key focuses of the Bank of England. But tomorrow we also got PMI, but we do have Governor Bailey speaking, and his comments is going to be extremely important for the pound, right? If he shows more of that dovish reaction, that dovish commentary, that's where we're going to be looking for more pound downside, right? But obviously, if we want to see some more strength in the pound, if economic data comes out stronger, that's going to increase the chances of a pause in December, and we're most likely going to see some more upside. But as of now, when it comes to trading, the pound is still neutral. But at least you can understand why the pound currency is still high, right? It's because of all those reasons right there. But hopefully this helps you guys, just looking why it's important to understand this stuff, just so that we could look for clear opportunities when it presents itself, because we know what the central banks are looking for. All right, guys. So just be safe. Understand that this week, a lot of important economic data coming up. So just try not to rush anything. And when those opportunities come, man, we're going to take advantage of it.